Yo, 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 what's good? Hope you good, man. Hope you good. All right, so before we get into this video, um, I just wanna remind you that yesterday, well, start off by today. Today is Thursday, which is the 11th of July. And yesterday, the 10th of July, you bought your funded challenge from FTMO, the 10,000 pound challenge, right? So now you are going to be embarking on this challenge to pass this um challenge and get funded, right? All right, cool. So without wasting any time today, you took your first trade of from the funded accounts, and we're going to quickly break down how you took the entry, why you took the entry, and what happened, right? And this is what we're going to be doing for all trades that you're going to take until you get funded and continue the journey, see where that takes you, you know. But you're going to be using this as a platform to journal and to run your thought process, to learn so that you can review your mistakes. And this will be a fruitful journey, right? Okay, let's get right into it. So first things first, obviously, you always go to your monthly time frame just to get a bigger perspective of what happened, right? So what did you do here? Uh, First things first, I checked the lower highs, higher lows, structure in general. We saw structure moving this way, right? And then we figured out that, okay, on monthly, this is where we are. We are in this wave. This is the wave we are in. And this entire wave is bearish. And currently it's a huge long consolidation on just a monthly time frame, right? But that's not where we are focused at. That was just to give us an idea and perspective of where we are, right? So in this entire um thing, it's the consolidation, but there are some clean moves within this co-consolidation, right? So on monthly, we now zoom into what is currently happening, right? Obviously, we start to see structure there, and so on, right? But this is what you did here. You focused on this structure to that structure, and then this structure and that structure, and ignored this. So the reason you ignored this is because you're looking into the more obvious waves, right? Cool. All right. So now that you know that structure was moving like this, right? Obviously, right here you have your lower high, correct? Sharp. So this is what you obviously did. You took the line where the high was, the lower high, and price broke it. So the fact that price broke that high, now we have a change of character and now, or structure shift. Now we are looking for bullish moves, right? Cool. So now that you're looking for bullish moves, what is current and where is price most likely to reach? The first high is number one. Before we look into anything else, this is the first high that you marked out, and that is the only thing that could have been marked out from this structure or this time frame, right? Just this. Cool. Next thing, you went to your weekly. So on your weekly, um, it still follows suit, right? Structure, 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 right? And then what happens after? Price goes up. Now, this is where the confusion could have kind of happened because, um, okay, right here, price did not break this to give us the bullish moves, the bullish confirmation on weekly. So on weekly, we do not have a bullish confirmation, right? But the monthly, which is the CEO, says, look, we are bullish, right? So, but the weekly is telling us, Uguti, we are still bearish because we have not broken the structure. We are still bearish, right? Cool. So this is where the confusion starts to kind of get in the mix, right? So what did you do? Né? It was quite obvious. It's okay. We've got our monthly bias of what is happening, and now we are looking into the weekly to find out if the bias is the same as the monthly. And right here, it's not the same, right? It's not the same. Here is just telling us that, look, we are still bearish, right? Cool. Um, Obviously, I mark out that high because this is the monthly high, which is telling us that this is where we would most likely reach if we were to be bullish, right? And then we start to look for the structural point before this high. And this is the structural point that we found, right? Obviously, some refining. All right, there. That is all that I found. And then this is what you also found as well. This is the structural point right over here. Easily like that, right? Cool. So why did I mark this out? Ne? So the reason that I'm marking this out is because this is a structural point. We obviously made a high. This is where we found structure, and we went right back into equal highs. And then we did what? We broke that. So this is significant. And this is where we can find moves or find exit points, right? So it's significant to mark it out because we are in this structural range point right now. So we are looking to trade within this range and see what can we find on the lower time frames. Cool. So we've got this marked out. Cool. So on weekly, this was marked out and this was marked out and this. There is nothing else for me to mark out. Everything else, I have to go to the daily time frame, right? But looking into this structural move right here, considering that monthly is bullish, right? If monthly is bullish, we already broke this area. We did the retest. And obviously, we'd expect price to just go bullishly up from here. From here, we expect price to go up. As it is right here, we're expecting price to go all the way up, right? But we were not a part of this, or we're not able to see this when it happened. So let's go to the daily to see what's this morning. Cool. So on the daily, obviously, this is the refined structure that we have. Refined structure over there. And then obviously we have to come back to this zone where the structure was also found as well. So over here, it's quite a big structural point, and I cannot point out exactly where is what, where did the wave start, and so on. So in general, I leave this. This is why you leave this, because this is just a bigger zone. Because I cannot say, Wuti, it came from this or from this, because this literally went all the way to the bottom of it, right? So this is still valid, and it's more clearer to leave it like this because um it's just more clearer to leave it like this, especially if you don't see anything right now. It's better to leave it like this so that you give yourself room to know that anything below this is a structural shift, right? Um, But since we are here on daily, this is where things became super clear, right? And this is where you took your entry base, right? So you already know that monthly is bullish, right? But weekly is giving you bearish moves, right? So you go to daily and your daily is also saying, look, we are bullish. Okay, so why is daily saying that we are bullish? We obviously um had the structure. We left a huge gap over here, huge range. So now we are looking to fill this range. But now, how do we fill this range? This is where I drew my structural points over here. And obviously, what was expected was a break above, retest, clear the entire range, right? But did we get that? No, instead we got violated over here, right? So when we got violated over here, price came back, and usually what happens is price can violate you, but comes back and retests it again as a second try, and then it literally finishes off the move, right? So when price did this break over here, I was happy. I was like, awesome. I want my retest and I want to buy. And my entry was somewhere around here. somewhere around this area right here. My stop loss was somewhere around there, right? Cool. So this was the entry point, right? But obviously, we're going to go into the 4 hour as well so that you can see further confirmations that I had. So quite clear, you wanted a retest onto this and buy, but this break was not strong. But I trusted it because we already violated. So chances of this retesting and buying were in my analysis or thought process at the time. So we went to the 4 hour. So on the 4 hour, this is the break that we had. Obviously, it's bullish, and now we're looking for a retracement and buy, right? So already we have this wave right here. So I'm obviously anticipating moves like this to a certain extent, right? So what do I do to make sure that this is in favor of me? I pulled my fib, obviously my fib. I was like, all right, cool. I'm just easily gonna buy off of this, and my stop loss was something like this, below my fib, below the structural point, right? That was my entry. Target was way above, somewhere over there. It was a 1 to 2, yes. And then CPI came, completely annihilated me, right? And took me out. So why did this trade take you out? We'll get into that. But then when price got to the sixth level, you also took another entry. So now you had two entries. This one was obviously had a bigger risk to reward ratio, because obviously, as you can see, right? And you took this trade because it was on sixth level and you basically wanted to trust or trusted this wave. But this wave did not prove to hold any weight. Now, why did this move violate us? Why did it violate us, right? Obviously, have to go back to daily and figure out, okay, something is missing here, right? We have this range to fill. Um, we got our break up, wanted to retest this area over there, and then what happened? We broke it right here, we broke it, and then we got down to the retest, we bought, got violated by CPI. But now, key thing that you missed here, ne? The key thing you missed is that you forgot about the mother of the break. You forgot about that. Yeah, you forgot about the mother of the break in general. So the mother of the break, this is literally the mother of the break, right? So now a mother of the break that started this entire wave. So naturally we had to come back. But the reason why I didn't look into this coming back is because we had already came back and we went up, right? So CPI came, it literally violated this. So had I entered over here, Bezos keep didn't. Bezos shy stop loss because your stop loss would have been somewhere below here, but it literally violated you over here, right? So now that now, we're not going to focus onto that, but we did not close below with body candle. So our bias is still bullish and we are still looking to fill into this range, right? So immediately when price violated this, right? CPI at that today. See, we had CPI today, on Thursday, obviously, the 11th. And when price violated this, automatically you could see, we would see, all right, we are tapping into the mother, but we are not closing below the mother. All right, let's go in for another entry. Now, first things here, you lost around 60 something dollars, which is over 0.5%. And your plan was to not risk more than 0.5% per trade, right? And you kind of went over that, and that kind of did mess with you a bit. And this is the reason why you also took this entry, because now you eventually were like, you know what, let me just make it a 1% day. 1% risk day. That's why you took this entry over here. It was an emotional trade at that. Very emotional trade, but you took it, right? And um, I forgive you for that, but please don't do that again. Um, have a strict plan on what it is you're doing. And if you say it's zero point 0.5, let it be zero point 0.5 and nothing more, right? Follow the plan, stick to the plan, but you're learning as you're doing this. So this is where it came again. I took this entry over here, somewhere around these parts. I took the entry, stop loss was somewhere below there. But the percentage in total was now 1% trade for the day risk. And obviously this TP is somewhere, I think it's somewhere here. We can double check again. Let me just quickly check. Uh, no. So TP is literally somewhere in this area, somewhere within these areas, right? Yeah, literally. Yeah. TP is somewhere here, right? And obviously, coming from the monthly time frame, we are looking to be bullish, right? On daily, we are now looking to be bullish, right? And if anything, to prove this bullishness, structure, everything was bearish until we broke this. And now, obviously, we are looking to make strides into the bullish move, right? Simple as that. Um, so you took this entry over here, and now you're currently holding this trade. It's a Thursday night. Most likely this trade will not play out today. Most likely will be playing out into next week, but this is a trade to hold, right? This is a trade to hold. So another thing, that's kind of in your head, right? Unconsciously is this. You are skeptical of this because you have a feeling that it might want to come back and sweep this because of past concepts that you've learned about liquidity. But this is not that. We are simply following structure. And the fact that you did not break below this, we are sticking to the plan. Now going into 4 hour. 4 hour. All right, 4 hour, nothing of much significance. Um, apart from the fact that we did not close below this. So the fact that we did not close below this structural point, I think that is a good point. Yeah, we did not close below this, so we're going to keep our analysis. And I'm counting this because we have structure here. We have the mother over here. So this is the structure below the mother. So the fact that it closed below this does not significantly mean anything until we've broken this part over here, right? But in general, apart from the 4 hour, the trade selection is based on daily. This is a daily move. This is a daily swing. Kodla intleki 4 hour. Kodla 4 hour. This is a daily move that you took part in, right? And currently, obviously, the trade is in profit, which is good. Am I gonna move my stop loss into break even? No, I am not. I am willing to let this trade do what it needs to do, right? Cool. Let's jump into proof of all of this. Um, so this is the funded account, right? Uh, this is the funded account. As you can see, it is a demo. Um, let's go into the first trade that I did take, which was taken out by CPI. As you can see, this is the first trade that I took. I wanted a retest of this. I literally went in on that retest and then press did a deeper pullback. And obviously, I took another trade on the sixth level. Yes, right there. On the sixth level, I took another entry, as you can see over here. And then my stop loss was obviously below this low, giving it a bit of room. CPI came, completely violated this trade. Completely violated it, right? Going for the mother, which is cool because we spotted that. Cool. So we obviously went in to the mother, and when we got to the mother, did not hesitate, even though it was an emotional trade, it was still based on the point that I know we are at the mother and there's another chance to execute the strategy, right? So on this strategy, this worked on the mother, right? So we executed this on the mother. Obviously, we put our stop loss right over here, giving it some room to breathe. And this stop loss is entirely based off making the trade become a 1% trade because I already lost like $67, $63 there, pounds, I mean. And then um 63 pounds was lost. So obviously when I put the stop loss, I did not want it to exceed a 1% trade. And I did this $32, $31 pound stop loss because I'm also considering spread, I'm considering commission and swaps and all of those things, right? So to me, this entirely makes up 1% risk trade. And I am comfortable with this, even though my stop loss was not entirely thought out, right? But we are in this trade and we are currently in profits, as we can see. With 27 pounds, which is about 0.25%. Cool. Um, so we are obviously looking to swing this trade all the way into there, which is going to give you about 2% return, right? But obviously, should price reach over here, when price passes this, I'll definitely or when price gets above this, I will definitely look into protecting this order and start looking into for new positions, which is gonna happen into the coming week, right? Or the coming weeks. Cool. So this is my proof, and yep, it is just like that. Um, so this is the setup. Itatile, and let's work our way into getting this funded account. You know, yeah. Oh, cool. Let's look into actually, before we do that, let's look into where we'd actually put the stop loss, right? So this is structure, obviously. Stop loss was somewhere maybe below here. Obviously, it's about giving your trade some room, man. S- Um, just give your trade room is what I would have you would have done. Obviously, had you had spotted this, obviously your entry would have been maybe there. And then give your trade room because you know price can do anything. Most likely below this. Most likely, it's exactly as the 4 hour as I had predicted it. So that structure right there. Just below that and you straight and you keep holding. So there's no guarantee in a trade. It's all risk, calculated risk, and this is one of the calculated risks I took, even though you were emotional. Um, I'll forgive you, but please do not do that going forth. Stick to the plan, right? Um, you need to reach £1,000 before you can get to phase two, right? So let's focus on that. Don't know how long it's gonna take, but I will be consistent. You will show up here, and well done, number one on taking the first step into doing this. All right, that's me, and yeezo.